A new buzzword has been rapidly gaining attention in the investing world, and it speaks to the early stages of a digital revolution within the financial system as we know it. What I'm talking about here is tokenization. For some like me who came of age in the 1970s and 1980s, this word probably conjures up memories of afternoons spent in video game arcades where trading dollars for game tokens made hours feel like minutes. Now, what I'm talking about here is a rapid progression towards the digitalization of markets for financial assets of all sorts, built upon blockchain technology. My name is John Lodra, and I'm a co-founder and partner here at New Harbor Financial Group, and I'm here to tell you about what's going on with this trend towards tokenization. Make no mistake, while the word tokenization has a certain unseriousness to it, major policy bodies and financial stakeholders the world over see it as an increasingly legitimate and probably inevitable trend. For example, in a sweeping report published in May of this year, the World Economic Forum, in collaboration with the consulting firm Accenture, highlighted how tokenization could make trillions in financial assets more accessible and efficient, and we're already seeing major platforms launch these products. And just within the last month or so, the Nasdaq exchange, where tech stocks that we all know and love trade, pitched a proposal for regulatory permission to add tokenized securities to their exchange. And comments so far from the SEC have been, I would say, open and receptive. This could literally reshape how retail investors build portfolios and access previously unavailable opportunities, and greatly increase the transparency, security, and efficiency of financial markets. But before you consider adding tokenized assets to your portfolio, you need to understand exactly what you're buying and what risks and opportunities come with it. So let's cover what exactly is tokenization. It's not an arcade game like I talked before, but it's also not cryptocurrency or NFT, non-fungible tokens, that many people think of when they think of crypto and tokens. The only commonality between cryptocurrencies, for example, and tokenized financial assets is that they're both built on an underlying framework referred to as blockchain technology. Here's a simple picture describing how the blockchain network works. So first of all, we have a concept of a transaction, and I'll talk about the different use cases for blockchain in a moment, but just imagine a transaction of some sort, of some commercial value. That transaction is represented in what is referred to as a block, a digital block. This notion of this chain, the blockchain, what this is, it's really a decentralized network of peer-to-peer computers all over the world. So anytime a transaction is created in a block, it's sent to every node in the network, the blockchain network. And then those nodes basically validate the transaction through a process called proof of work. They use computing power to solve very complicated mathematical problems to legitimize the transaction in question. But there's also a proof of stake concept here that is a different way of kind of validating transactions. But suffice it to say, there's a lot of financial reward and incentive for properly validating legitimate transactions. It's the coming together and the decentralized validation that gives it legitimacy. And once that transaction or that block is validated, it's added to this ever-increasing long chain of validated transactions. I know that sounds a little bit simple, and it is, but that's really kind of what it is at the heart of the blockchain technology infrastructure. So really, the blockchain is simply a robust technological innovation for record-keeping, verification, legitimizing transactions, data, ownership, and the applications of the blockchain are very widespread. Again, many people think blockchain equals cryptocurrency. Cryptocurrency is just one of many, many, many applications of the blockchain. So for example, blockchain technology would be a very appropriate and innovative way to, for example, keep track of title on real estate property ownership. In many parts of the world, including here in New England where our team lives, there are literally registry of deeds where you have to go in with a physical paper deed and file it or pull it. And some of these properties go back many, many decades, if not centuries. And there's all kinds of question as to at what point maybe there was improper ownership or imperfect ownership. And that's why we have things like title insurance on real estate titles. There's novel ways that people are talking about using blockchain technology to digitize and make more accurate health records, making sure that health records for one patient don't get accidentally mixed up with health records of another. Obviously, that could be a very tragic mistake if something bad happened there. And the blockchain network is just an infrastructure that can be applied to all sorts of things. Now, the tokenization of financial assets is simply the application of blockchain technology to document or validate the creation of securities, the trading of financial securities, record keeping, and ultimately verification of ownership. We're talking about things like stocks and bonds, very basic building blocks of the investment product landscape. Now, I know some of you might be thinking to yourself, well, today's systems are not perfect, but they work just fine. And if it ain't broke, why fix it? I'm about to get into all that, and I'll highlight some of the compelling benefits that I think and others have highlighted, but also cover some of the things that I think you should be looking at with some real concern and caution. There's some dangerous things that could happen if this technology and this power was in the wrong hands, in my opinion. So let's do a brief review of then and now as relates to some of the most basic financial instruments, stocks and bonds. Way back when you owned stocks and bonds, you literally had paper certificates with different, company names on them, Bell Telephone and, American Railroad and Bethlehem Steel and all these kinds of things. And they literally were very elaborate pieces of paper that was the testament as to ownership of a share of those particular companies. And when it came to bonds, you literally had paper booklets of coupons that you would pull out to redeem for cash interest payments that bonds pay. That's why when we talk about bonds today, we talk about coupon interest rates. But you actually, at one point, had to literally redeem a physical paper coupon to get the interest rate. And quite honestly, if the dog ate your certificates or your coupon book, you were literally out of luck. So obviously, the system has innovated well beyond that a long time ago. You can barely, I don't think there's many stock certificates you can still get issued in paper form. The industry moved to a system that is digital in its own right, called registration in street name, and ultimately phasing out physical certificates. So we already have a digital system. So this tokenization move is not new in the sense that we've already got a digital system. The problem is the legacy system is clunky, inefficient, subject to errors and even theft, and barriers to participation and things like that. And that's really what the tokenization on the blockchain infrastructure is meant to improve upon. So let's talk about some specific examples. So not too long ago, when paper certificates were the way you traded stocks, there would literally have to be clerks in offices, mailing certificates in the mail. Maybe there was a fast overnight courier or whatever. God forbid you were sending it across the country or overseas. But you can imagine there were a number of days that had to intervene before the actual settlement of a stock sale or purchase could be officiated. That moved to what we call T+5, basically trade date plus 5 days. And then the industry got faster technology and it became T+3, trade date, and then 3 days, 3 business days to settle. And just in the last couple of years, most big brokerage and clearing firms like our custodian for our clients, Charles Schwab, it's now T+1, but it's still a whole day between the purchase or sale of a security and the actual final settlement of that cash. The idea here is that tokenization could literally make that real time. Why is there this delay, even one day? If a client calls us today, for example, and says, I would like some cash sent to my local bank account, we oftentimes have to sell something and we can't send the cash out until the next day. So it ends up being a 2-day delay. With this kind of technology, it's very conceivable that our clients could have their cash instantly. And that's a good thing, right? There's nothing at all bad about that if it's safe and secure. Let's talk about accessibility. Tokenization will allow fractional shares. So people with lesser means can actually more feasibly own pieces of investments that they otherwise couldn't. Let's talk about, for example, Berkshire Hathaway, the company, of course, that Warren Buffett's name is associated one-to-one with. He has since retired, but still very much the face and name of that company. Well, the A-class shares for that company trade today at like $750,000 per share. Thankfully, many years ago, they issued a new class of shares called B shares, but even those are nearly $500 per share. So at most traditional brokerage firms, you can only buy at least one share. But even $500 for many people to buy B shares in Berkshire Hathaway is way too much. But imagine you can buy 1/1000th of a share. That's something that everyday people can afford more readily. So that's a good thing, to take away these artificial barriers about sizes of investments. Let's talk about access across borders. Right now, even with the modern electronic systems, it's very difficult for people to trade stocks internationally. If US citizens want to buy stock that trades only on a foreign exchange, it's kind of complicated, and vice versa for folks in emerging economies, for example, overseas that want to elevate their financial standing in life and they want to be able to invest in some of the world leading companies that the US has continually built and allowed investors to participate in. The tokenization move will allow just that. All these clunky border restrictions and systems and artificial speed bumps, if you will. And that's in spirit of a very good thing. Why don't we make unencumbered assets to even the most simple and disadvantaged among us the world over? That's really opening up, taking down barriers to people elevating their lot in life. And then there's the modern system is pretty convoluted, as digitized as it is. It's still kind of convoluted and a little bit head scratching at times. So for example, when you own stock today, it's held in street name, but there are these entities that many people aren't familiar with. For example, DTC Corporation, transfer agents. And there's actually quite a convoluted legal structure as to raising legitimate questions about actually who owns what when push comes to shove in for example, a financial crisis. And that was actually the subject of a widely talked about book a couple of years ago called The Great Taking. And that raised some eyebrows because when you took that book and its investigation to its deep conclusions, it literally raised some legitimate questions that if the powers that be wanted to essentially confiscate financial assets like stocks and bonds and things like that, it couldn't be said without a shadow of a doubt that couldn't be possible. So this is another area where the blockchain is believed to be able to greatly increase the sanctity of ownership and removing middle persons or powered interests from being the middle persons on the simple act of buying and selling something of value between two parties, to a buyer and a seller, and everybody else in the middle gets removed. One key I want to make is that the tokenized assets, as imagined by players like the Nasdaq and their proposal to allow tokenized assets on their exchange, and the regulator, they see these as essentially equivalent to an ability to exist in parallel harmony with the traditional shares. Different form of record keeping. It's not meant to be a shadow asset or some kind of redundant or fictitious asset. It's meant to be all the same rights of ownership, just in a different digital form and not duplicative, but in parallel and in harmony with the more traditionally traded shares under the current system. So one question that would be appropriate to ask is, what is the limit on what can be tokenized? And the honest truth is there is none. Anything can be tokenized, even cash, for example. I did a video on our channel some weeks ago on stablecoins and 101 on understanding stablecoins. So check that video out if you haven't seen it. I think it'll help to add some context to this one. Things like gold, real assets like gold there's been a lot of talk about tokenization of gold. So for example, the LBMA, the London Bullion Markets Association. This is basically the big authority in gold storage and pricing in Europe and London. They had a proposal to tokenize gold held in their vaults, basically to convey transparency on what's in inventory, remove suspicions as to whether the gold is really there. There's been other proposals to digitize gold in small coinage and things like that. And some see this as really a challenge to things like Bitcoin, which is oftentimes referred to as digital gold. I actually think there's some real merit to that. If you can perfect the record keeping and validity of storage of things like gold and tokenize it so that people can trade that freely in digital form, I think it takes a lot of the thunder out of things like Bitcoin. It's just something that deserves watching and scrutiny, like with anything. Like with any asset, whether a physical asset or shares in a company issued in paper certificate, you want to do your homework. You want to make sure that the asset, whether it's physical or in digitized, tokenized form, that it actually has legitimate value and utility. And again, I come back to the craze a few years ago of the non-fungible tokens, the monkeys there were actually digital picture art of bored monkeys, and there was different colors and variations on them. But some of these went for many thousands, if not tens of thousands of dollars or more. And it kind of just speaks to, ultimately, no matter what the form of the asset, you want to make sure it's actually got true value and utility to individuals and the society at large. Art is there's somewhat subjective definition as to what value art has. But like with anything, just be careful and critical about any asset you buy. So I want to talk about some of the dark sides that I'm worried about, and I think people should be very open-eyed about. So I referenced the report put out by the World Economic Forum earlier in this video, and it was quite an optimistic, report on the use cases and the validity of tokenization of financial assets. Now, yet this is coming from an organization that many people see as a cabal of out-of-touch elite who have become associated with control of economic outcomes. There was vision by the forum that included that asset ownership. People won't own as much. There'll be more kind of sharing stuff. Like you won't own a car, you'll share it. And that led people to kind of cast a meme on top of the World Economic Forum that their mantra was you will own nothing and be happy. So one might be forgiven for being a little bit skeptical that this entity, this bureaucratic agency that has literally quite a bit of control on the financial systems and outcomes for people all over the world, that they'd be a little bit skeptical that their backing tokenization shouldn't be a head scratcher. And I'm going to point you to a video that my partner Mike Preston did on the whole great taking book. He actually did a couple part series. So the real key for me, and I think investors should be thinking about this, the key is not the system itself or the tokenization. It's just that who ends up controlling and governing the systems. In the wrong hands, this kind of trend could be bad. There's an interesting book that came out that one of my colleagues here at the firm came across called Hijacking Bitcoin, for example. As much as Bitcoin is in its purest form meant to be decentralized and immune from control of any one person or entity, this book actually raises some pretty interesting questions about whether the Bitcoin movement hasn't itself been corrupted with some of these very things that it was attempting to evade. I think this is a fascinating topic that deserves a whole lot of questions and discussion. I'd invite you, the viewers, to let me and other viewers know what questions you have on this and what your thoughts are. Let's start a discussion, because the more informed we all are, the more prudent we'll be in adopting in our own financial lives these kinds of trends. So what does this mean for you? I'm going to give you some actual thoughts or takeaways. First of all, don't fear it. History is replete with innovations that were changes, and changes in and of themselves can be fearful events. But don't fear this, and don't confuse tokenization with legitimacy. Again, worthless assets can be scammed, and scams can be tokenized too. Make sure the underlying asset that's being tokenized is something that is truly credible and worthy of your financial resources. Educate yourself. This is an evolving trend. Educate yourself or enlist the insight of somebody you trust, whether it's a friend or family member or a financial advisor if you work with one. Of course, our clients know we here at New Harbor Financial, we really value the opportunity to educate our clients, because with education comes empowerment. And for folks that are seeing this video that aren't current clients, we're happy to have a one-on-one consultation, no strings attached. Let us know what questions you have. We can talk about anything you like. It could be related to the topic here, or a more comprehensive, holistic review of your financial situation and how these or other realities of the modern financial system might affect that. Look at the links to how you can schedule a call with our team is in the description below. Please, don't forget to like and subscribe to this channel. Turn that little notification bell on so that you can be alerted anytime we put new content out. We put new content out almost every week, maybe so, and sometimes several times a week. So for now, I want to thank you for watching, and until next time, I wish you a great day.